Hello everyone! Well, we've talked a lot about motor insurance, especially within the French market. But is motor insurance the same around the world? The answer is obviously no. So, let's take a ride together and examine the specificities of motor insurance around the world. First thing we all have in mind when we hear the term motor insurance is a compulsory part of it. But is it the case everywhere? You will never ever even think of getting behind the wheel of a car without having protection in case of an accident. Well, even though motor insurance is mandatory in almost all countries around the world, there are a few places where it is not compulsory or not entirely compulsory. For example, only motor bodily injury is compulsory in Israel, and motor insurance is purchased by the driver only on a voluntary basis. That is the case of our first stop, South Africa. Despite having a broad range of insurance offers, a study conducted in 2020 by the Automobile Association of South Africa established that 65% to 70% of the 8 million vehicles in that country are currently not insured. Most South Africans do not buy an insurance policy due to the cost of the premium, but unfortunately, in case of an accident involving bodily injury, the cost of compensation is paid to the victim. This usually leaves a faulty driver ruined, as they do not have the resources to pay for this compensation. To provide the minimum of indemnity to the victims, the South African government implemented a road accident fund, provided a portion of compensation to the parties that is reduced depending on the percentage of responsibility they bear in the accident. In Europe and almost all countries in the world, motor insurance is mandatory by law, but it doesn't mean that all covers are the same. However, the European Union Motor Directive provides a standard and minimum scheme that must be complied with by all European Union member states. Moreover, all countries within the green card system make it mandatory for drivers to have a motor third-party liability insurance. So our second stop, Europe. As already discussed and seen in the previous videos, motor insurance in France is mandatory and provides unlimited coverage to a third party in case of a loss. Optional first-party driver insurance may be purchased. It should provide up to €1 million in coverage to driver regardless of his or her liability. What about the other European Union member states? In 2009, the European Union promulgated a European directive making it mandatory for all motor vehicles in the European Union to be covered by third-party liability with a minimum amount for bodily injury of €1,220,000 per victim and €6,070,000 per claim, whatever the number of victims. That is a required minimum amount of coverage. So, depending on the European country and its legislation, motor liability cover may be slightly different. In Poland, for example, most insurers provide the amount stated in the European directive, whereas in Western Europe countries, providing unlimited cover for third party is a standard. To cover this gap when traveling across Europe, we implemented what we call the Green Card, making motor insurance valid in almost all European territories and offering protection regardless of the original domestic limits. Example, if a Polish insured driver has an accident with his or her own car in France or Germany, and if he or she is at fault, the insurance company will provide liability coverage on an unlimited basis, even if the cover on the driver's domestic market will be limited. Quite practical if you plan a road trip across Europe. We have discussed insurance coverage obligation or covered amounts, but do all countries deal with motor liability on the same indemnity basis? Again, the answer is no. There are two bases of indemnity: third-party liability and no fault. Third-party liability is quite simple to understand. If you are at fault in the event of a loss, then you and your insurer will have to pay the consequences and compensate the victims. But what's the no-fault basis? Our next stop, New Zealand. In New Zealand, there is no motor third-party liability covering bodily injury because everyone is already protected by the Accident Compensation Corporation on a no-fault cover basis. This means that in case of an accident, the liability is established and all persons injured are covered and receive compensation through the ACC. This fund is financed by taxes and annual vehicle license fees, so everyone participates in this fund. However, the fund only pays compensation for bodily injury. So, to protect themselves in the event of motor property damage, New Zealanders must still purchase additional motor property coverage. Most countries choose to use a third-party liability insurance basis. No-fault basis is mainly used in New Zealand, Australia, and in some Canadian provinces and US states. One last point we haven't mentioned during a road trip across motor insurance is that the payment of the compensation can be settled in two different ways: for lump sum payment or and annuity. Some markets use both, depending on the court decision or the decision of the victims. A lump sum settlement is a one-time payment, providing compensation for an injury. It means that the victim will not receive any future payments. So in case of serious bodily injury, the victims have to carefully scrutinize the amount received by the insurer in order to be able to meet any additional future expenses they could incur. Last up, Asia. In Japan, for example, it is pretty common to settle losses on a lump sum basis, with a fixed payment based on a predetermined table of compensation used by the market. This will depend on the victim's condition, but also on other specific variables such as his or her family situation, for example, the number of dependents, the job position, the degrees of disability, and more. The compensation is paid quickly and the losses are settled very fast. On the other hand, an annuity is a series of payments made at equal interval over time that is aligned with the needs of the victim until his or her state of health has been consolidated. In case of severe bodily injuries, annuities can be paid for over 20 or 30 years. First, the insurer and reinsurer will carry the loss for a very long period of time and have to meet all the challenges involved. This means that the insurer needs to estimate the total final cost of the loss, considering the cost of future care, the inflation, financial return, and many more criteria, and book the appropriate amount of reserves. This makes annuities much more of a challenge than a lump sum settlement. Well, we reached our final destination. As you can see, motor insurance can be very different from one market to another, and as a reinsurer, we need to understand these market specificities in order to offer the most appropriate protection and solution to our partners. This video is closing our topics dedicated to motor line of business. On the next video, Patrick will open a new chapter dedicated to the challenges our world and industry is facing, catastrophe events. I hope you've enjoyed this video and I'll see you soon for another one.